Just watching TVC News at 10. In other stories in business now, President Bola Tinubu has approved the appointment of new members of the management team of the FGN Power Company Limited. The new appointment is contained in a statement by the Special Advisor to President on Media and Publicity, Mr. Jurin Gelale, in Abuja. He said the appointment is in recognition of the role of power supply in driving enterprise and industrial development and part of a comprehensive effort to reform the power sector and ensure energy security for Nigerians. Members of the new board include Managing Director, Chief Executive Officer, Mr. Ken Anoe, Company Secretary and Legal Advisor, Professor Maman Lawal, Chief Financial Officer, Mr. Julius Olabi, among others. With the appointment, the new team is expected to work for the realization of the core objectives of the Presidential Power Initiative in close collaboration with Siemens Energy. And in the meantime, the Organization of Petroleum Exporting Countries has called for the phasing out of fossil fuels, which threaten the model on which oil and gas producing countries' economies are built. OPEC Secretary General Mr. Haitan Aigai said these at a meeting on the sideline of the Energy Summit in Abuja. Helen Osamide-Akin's report.
Over the years, there have been calls for the need to transit from fossil energy to renewable energy. These calls have gotten different reactions from different quarters around the world, including the Organization of Petroleum Exporting Countries. OPEC believes that focus should be on decarbonization and reducing emissions around the world rather than pushing the narrative for one source of energy, which they say will lead to an energy crisis in future. The Secretary General says the demand for oil will grow to 116 million barrels per day by 2045, and with the projected population growth in the world, it will be misleading to call for the replacement of one source of energy with another.
And we believe that, yes, coal consumption will decline and renewables will accelerate as the world keeps pushing rapidly towards achieving lesser emissions and lower emissions, where renewables will play a bigger part in the energy equation. However, renewables are starting from a very low base today and will rise at a very high pace. Nevertheless, oil will remain a fundamental cornerstone of supplying the world with all its energy requirements.
The organization seeks for more investment in oil, following the huge projection for the demand of the...
Our outlook shows that the oil industry alone will require $14 trillion, 14 trillion with a T, from now to 2045, for the full value chain in the oil business, with its upstream, midstream, and the downstream sectors.
The Organization of the Petroleum Exporting Countries is established to enhance the cooperation of leading oil-producing countries in order to collectively influence the global oil market and minimize profits. With increasing calls to phase out fossil fuel, which are considered to be dangerous to the environment by causing climate change and releasing pollutants that leads to earthly death, the need for a clean energy transition is now a global emergency. But OPEC has its reservation. Helen Osamide-Akin, TVC News, Abuja.
And now the influx of capital into Nigeria plays a pivotal role in driving economic growth, fostering business expansion, and enhancing overall market dynamics. Earlier on our flagship program, Business Nigeria, experts commended President Tinubu's effort in winning foreign investors into the country to boost foreign direct investment.
So we first need to give thumbs up to the president, which was initially, when he came into office, all of his travels and meetings and all that, they're beginning to bear fruit now. And we're seeing that initial drive to spur investors' confidence, leveraging on relationships in the international market has, sort of improved the state of things a bit when it comes to capital being imported.
The ease of doing businesses has also dropped because of the fact that we are having higher exchange rates at the moment. We are also having difficulties in sustaining businesses as a result of the higher rates of getting diesels and petrols to fuel businesses. But in terms of financing, yes, a lot of shares, and because interest rates has also gone higher, a lot of shares are being sold at higher rates, attracting investors in such a way that it boosts the economy.
But away from there now, the African Development Bank Group support for Cote d'Ivoire rose from $460 million in 2015 to $3.1 billion in 2023. President of the bank, Dr. Akiomi Adesina, said this in a statement today that the bank's support to its home country increased by more than fivefold since 2015. Dr. Adesina disclosed this at a diplomatic luncheon he hosted for ambassadors in Abidjan. He said last year the board of directors of the bank approved 159 operations worth $10 billion for countries, the second highest level of financing in the bank's history, which made the bank the largest multilateral financier of infrastructure in Africa. And in China, the latest factory survey shows that manufacturing activity in February contracted for a fifth straight month, raising the pressure on policymakers to roll out further stimulus measures as factory owners struggle for orders. Purchasing Managers Index fell to 49.1 in February from 49.2 in January, below the 50 mark, separating growth from contraction, and in line with the median forecast of 49.1. While non-manufacturing PMI, which includes services and construction, rose to 51.4 from 50.7 in January, marking the highest reading since September last year, due to robust activity during the New Year holidays. The world's second biggest economy has been grappling with growth over the past year amid the property crisis and as consumers hold off spending, foreign firms diverse, manufacturers struggle for buyers, and local governments contend with huge debt burdens. And in crude oil space, crude oil prices dropped earlier and were set to end the week modestly higher as markets awaited an OPEC Plus decision on supply agreement for the second quarter amid differing demand indicators for key consumers, U.S. and China. U.S. West Texas Intermediate crude rose to sell at $70.88 per barrel with an upsurge of 0.79%. While Brent crude futures experience an upward price margin of 0.85%, selling at $82.61 per barrel. And Bonilla sells at $85.33 per barrel with an uptick of 0.35%. And for the OPEC basket, crude oil dealers are offering $82.01 per barrel with a price decline of 0.01%.